Hi, everybody. This is Alan Ellman, the Blue Collar Investor, and welcome to this BCI podcast number 59, titled Analyzing 2-Month and 4-Day Trades. And we're going to be using a real-life example with Spider S&P Biotech ETF, which trades on the New York Stock Exchange under the ticker symbol XBI. Now, these trades were sent to me by Mario, one of our long-term members of the BCI community. We always appreciate Mario's important input into our learning process. Here's how it went. From April 17th, 2019 is when the trade started. And we're going to go through June 18th when the last trade was entered as of the email that I received. XBI was purchased at $84.95. Then over the next 2 months, Mario sold calls and hit doubles. So he created 2 income streams in the same month a couple of times to lower his cost basis or break even from $84.95 all the way down to $81.93. So now here we are on June 18th when the current share price was up to $86.92. And what Mario did was create a 4-day trade through June 21st, where he sold the 87 slightly out of the money call to 89 cents. And that was after commissions. So let's take a look and analyze these series of trades. If we take a look at the very final trade, on the series of trades, XBI at the time was trading at $86.92. So when we're deciding on whether or not to sell this 87 4-day call, we must use the current price of the stock to make our best decision. Now, the option chain showed a premium of 89 cents, which represented a 1% 4-day return, with a very slight 0.1% possibility of upside if XBI moved from $86.92 up to the 87 strike over the next 4 days. So 1% doesn't seem like a real big deal, but it's a 4-day trade, folks, so it is actually a very big deal. So let's look at the big picture now. After the sale of that last weekly option, the new break-even point drops from 81.93 rather to 81.04 because of the additional 89 cents per share in premium that we received by selling that last 87 call. Now, if the share price remains the same and the option is not exercised, the unrealized share profit is $5.88 per share. That's $86.92 minus the new break-even, $81.04. And that results in a 6.92% 2-month return. Now, if the option is exercised and the shares are in fact sold at 87, then the total 2-month gain is now realized because the shares are sold, and that would be at a 7.01%, which annualizes out to 42%. Either way you look at it, this was a very, very successful series of trades. And note that when we're looking at the decision to sell that 4-day option, we're using the cost basis of what the price is at that point in time to make our best trading decision. When we're looking at the big picture, then we take a look at the actual break-even point. So let's summarize. Covered call writing is a cash-generating strategy that can actually be looked at from both short-term and longer-term perspectives. As option sellers, when we're making a trading decision, we must focus on short-term. So the stats at that point in time to assist us and guide us into the best trading decisions. But when we're analyzing our long-term success, we must factor in the overall trades that were made, in this case, over a period of 2 months. And that will give us the picture as to our success or lack thereof regarding this particular series of trades. So two different sets of calculations. So before I go, once again, as I always do on these podcasts, let me remind you that we have quite a few free resources on our website, www.thebluecollarinvestor.com. In particular, look for the free resources link on the top black bar of all of our web pages. You can also check out the hundreds of articles that I've written on option selling, as well as on the blog page, you could sign up for our free newsletter, which is published every Sunday morning at 10 a.m. Eastern Time. And of course, there are a lot more free resources, as well as the calculators and files located in that link. Also, if you're just starting out, have a look at our free Beginner's Corner tutorials, one on covered call writing, one on selling cash secured puts. Those are 8-part video tutorials, about 10 to 15 minutes on each video, which gives you an overview of these two great strategies. So just look for the Beginner's Corner on the top right side of our web pages. Now, if you go into the bluecollarinvestor.com store, we have books in very different formats. We have ebooks, soft-covered, and a few hard-covered books as well. In addition to the calculators and spreadsheets, we have about 10 or 12 of those. Some of them are bundled, some can be purchased individually, as well as our online streaming DVD programs, in addition to our trade planner and online mentoring programs. So there's quite a bit of information available in the bluecollarinvestor.com store as well. Ladies and gentlemen, I want to thank you so much for taking the time to listen to this BCI podcast number 59, analyzing 2-month and 4-day trades, as well as thanking Mario for sharing his trades with us. I hope you enjoyed it, and most importantly, hope you make some money from it. As always, this is Alan Ellman, the Blue Collar Investor. Take care, everybody.